The average American waits 2 weeks to get paid. But what if I told you there's a way to get paid every single week? Not from a job, but from your investments. Imagine waking up every Monday to a fresh deposit in your account. That's $200 flowing into your pocket week after week without fail. Sounds too good to be true? Well, stick around because I'm about to show you exactly how to set this up, step by step. The secret sauce behind this weekly windfall is a carefully crafted portfolio of dividend stocks. These dividends are about to become your new best friend, and here's why. A dividend is simply a portion of a company's profits that gets paid out to shareholders. However, not all companies pay dividends, and those that do pay them at different times and at different rates. Some pay quarterly, some monthly, and a select few even pay semi-annually or annually. Most dividend investors are content to wait for their quarterly payouts. But we're not most investors. We're here to get paid every week, and that's exactly what we're going to do. Dividend-paying companies also tend to be more stable and established. They're not fly-by-night operations. They're the steady eddies of the stock market. This stability can provide a cushion during market downturns. Plus, many top dividend payers increase their payouts over time, helping your income keep pace or even outpace inflation. And after thorough research, I have found the 12 best dividends that can change your fortune. You can have $200 in your pocket without doing anything. So here's the basic structure we will be using. We'll have 3 stocks paying in January, April, July, and October, 3 stocks paying in February, May, August, and November, 3 stocks paying in March, June, September, and December, and 3 additional stocks to fill in any gaps. Within each group of 3, we'll have 1 stock that typically pays in the first week of the month, 1 in the second or third week, and 1 towards the end of the month. This staggered approach ensures that you're never more than 7 days away from your next dividend payday. Now, let's meet our 12 dividend dynamos that will make this weekly income dream a reality. Our first stock is Walmart, WMT, with a dividend yield of 1.6%. Walmart pays dividends in January, April, June, and September, typically in the first week of these months. While Walmart might not have the highest yield on our list, its rock-solid stability and consistent dividend growth make it a cornerstone of our strategy. With its expanding e-commerce presence and unmatched scale in brick-and-mortar retail, Walmart is well-positioned to continue its 47-year streak of dividend increases. Next up is Altria Group, MO, having a hefty 7.9% dividend yield. Altria pays out in January, April, July, and October, usually in the second week. This tobacco titan has one of the highest yields in our lineup. While cigarette volumes are declining in developed markets, Altria's pricing power and investments in alternative products, like its stake in Juul and Kronos Group, help maintain its generous dividend. Its 50-plus year history of dividend increases speaks volumes about its commitment to shareholder returns. Our third stock is WP Carey, WPC, a diversified real estate investment trust, REIT, with a 5.8% dividend yield. WP Carey pays dividends in January, April, July, and October, typically in the third week. Its portfolio spans industrial, warehouse, office, and retail properties. The company's triple net lease structure provides stable cash flows, while its geographic diversification with significant holdings in Europe adds another layer of stability. WP Carey has increased its dividend every year since going public in 1998. Rounding out our first quarterly group is Cisco Systems, CSCO, offering a 3.4% dividend yield. Cisco pays out in January, April, July, and October, usually in the fourth week. While tech stocks are not typically known for dividends, Cisco's strong cash flow and dominant market position in networking hardware allow it to offer an attractive yield. Its pivot towards software and subscriptions is promising for future dividend growth. AT&T, ticker symbol T, starts out our second quarterly group with a bang, offering a hefty 6.9% dividend yield. The telecom behemoth pays dividends in February, May, August, and November, typically in the first week. Despite recent challenges in its media division, AT&T's core wireless business remains a cash cow. The company's high yield and long-standing commitment to dividends, it's been paying them for over 30 years, make it a staple in many income portfolios. While AT&T's dividend growth has slowed in recent years, its current yield is hard to ignore for income-seeking investors. Next in line is Blackstone Group, BX, one of the world's largest alternative asset managers with a dividend yield of 3.5%. Blackstone pays out in February, May, August, and November, usually in the second week. What sets Blackstone apart is its variable dividend policy. The company aims to distribute most of its earnings to shareholders each quarter. This can lead to fluctuations in the dividend, but also the potential for higher payouts when the company performs well. Blackstone's expertise in navigating complex financial markets makes it a unique addition to our weekly dividend portfolio. You might be surprised to see Apple, AAPL, on this list, with its relatively low yield of 0.65%. Apple pays dividends in February, May, August, and November, typically in the third week. But hear me out. Apple's inclusion is all about balance and growth potential. While its current yield is modest, Apple's dividend has grown at a compound annual growth rate of over 9% since it was reinstated in 2012. With its massive cash reserves and consistent earnings growth, Apple has plenty of room to continue boosting its dividend. Plus, the potential for capital appreciation adds another dimension to its total return potential. Next is Caterpillar, CAT, offering a 2.9% dividend yield. Caterpillar pays out in February, May, August, and November, usually in the fourth week. Known for its iconic yellow machines, Caterpillar is the world's leading manufacturer of construction and mining equipment. While Caterpillar's business is cyclical, its dividend is rock solid. The company has paid a dividend every year since 1933 and has increased it annually for 27 consecutive years. With potential tailwinds from infrastructure spending and a rebound in commodity prices, Caterpillar is well positioned for both dividend growth and capital appreciation. Let's move on to our March, June, September, and December payers. Pfizer, PFE, starts off our third quarterly group with a 3.9% dividend yield. Pfizer pays dividends in the first week of March, June, September, and December. As one of the world's largest pharmaceutical companies, Pfizer boasts a diverse portfolio of drugs and a robust pipeline of potential blockbusters. Beyond its recent fame for its COVID-19 vaccine, the company's steady cash flows and commitment to returning value to shareholders make it a reliable dividend payer. Pfizer has paid dividends for over 80 years and has increased its dividend for 11 consecutive years. Johnson & Johnson, J&J, a diversified healthcare giant, follows with a 2.6% dividend yield. J&J pays out in the second week of March, June, September, and December. The company is the epitome of a dividend aristocrat, having increased its dividend for an impressive 58 consecutive years. J&J's business spans pharmaceuticals, medical devices, and consumer health products, providing stability and multiple avenues for growth. Its consistent earnings, strong balance sheet, and commitment to R&D make it a cornerstone of many dividend portfolios. Avery Dennison, AVY, might not be a household name, but this global materials science company plays a crucial role in many industries. Offering a 2.0% dividend yield, Avery Dennison pays dividends in the third week of March, June, September, and December. From labels and packaging materials to radio frequency identification (RFID) solutions, Avery Dennison's products are ubiquitous. The company has paid dividends for over 50 years and has increased its dividend for 10 consecutive years. Its focus on innovation and expansion into high-growth areas like smart labels positions it well for future dividend growth. Lockheed Martin, LMT, the world's largest defense contractor, completes our 12-stock portfolio with a 2.4% dividend yield. Lockheed pays out in the fourth week of March, June, September, and December. While defense spending can be cyclical, Long-term contracts and a diverse product portfolio provide Lockheed with stable cash flows. The company has increased its dividend for 18 consecutive years, with a 5-year dividend growth rate of over 9%. Geopolitical tensions and increasing defense budgets worldwide suggest a favorable outlook for Lockheed's business and its ability to continue rewarding shareholders. To achieve our target of $200 per week in dividends, you'll need to invest a significant amount of capital. Based on the current yields of these stocks, an initial investment of approximately $120,000 would be required, allocating $10,000 to each stock. To implement this strategy, start by opening a brokerage account if you don't already have one. Choose a reputable broker that offers commission-free trading and dividend reinvestment plans, DRIPs. Next, allocate your capital by investing an equal amount in each of the 12 stocks. This balanced approach helps manage risk and ensures a steady stream of dividends throughout the year. Once your portfolio is set up, enable automatic dividend reinvestment for all stocks. This allows you to compound your returns over time by using your dividends to purchase additional shares. Regularly monitor and rebalance your portfolio as needed. This might involve selling some shares of outperforming stocks and buying more of underperforming ones to maintain your desired allocation. Lastly, stay informed by keeping up with news and earnings reports for each company. While these are all stable businesses, it's important to stay aware of any developments that could impact their dividend policies or overall financial health. One of the most exciting aspects of this strategy is the power of compounding. By reinvesting your dividends, you're not just earning $200 a week, you are continuously growing your investment and increasing your future dividend payments. Let's look at a hypothetical example. Assuming an average dividend yield of 3.5% and an average annual stock price appreciation of 5%, your weekly dividend income could grow from $200 per week, $10,400 annually in year 1, to $237 per week, $12,324 annually in year 5, $302 per week, $15,704 annually in year 10, and an impressive $491 per week, $25,532 annually by year 20. Remember, this growth assumes you are reinvesting all dividends and not adding any additional capital. If you were to contribute extra funds each year, your results could be even more impressive. While this strategy offers the potential for consistent weekly income, it's important to understand the risks involved. Market risk is a primary concern, as stock prices can be volatile, and even stable dividend-paying companies can experience significant price fluctuations. There's also the risk of dividend cuts. While these companies have strong dividend histories, there's always a possibility that a company could reduce or eliminate its dividend due to financial difficulties or changing business conditions. Concentration risk is another factor to consider. This portfolio is concentrated in just 12 stocks, and while we've aimed for sector diversification, it's still less diversified than a broad market index fund. Interest rate risk is also worth noting, as rising interest rates can make dividend stocks less attractive compared to fixed income investments, potentially impacting stock prices. Remember, this strategy requires a significant initial investment and comes with its own set of risks. It's crucial to do your own research and consider consulting with a financial advisor before implementing any new investment strategy. So what do you think? Are you ready to start building your own weekly dividend machine? Let me know in the comments below, and don't forget to subscribe.